Richard, let's talk about this because, correct me if I'm wrong, but this feels like the most important time we've had for a very long time in the world of central banks.
Yeah, I think we're in for a change of direction. And whenever you have a change of direction, which is imminent, it creates some concern and some volatility. I think Peter was correct in the sense that the Fed's got a very tough road to navigate here. They have to deal with the inflationary pressures, perhaps a little bit of a weakening in the economy, but they also have to be conscious of the fact that financial conditions have to stay stable. And it's going to be a very tough decision to make. But they're moving in that direction. They've telescoped it. We know it's coming. And now it has to be discounted in the way investors behave.
Richard, we've been talking all morning about the supply chain issues and about inflation.
Right.
And, it keeps coming up that one cure for this would be as if we were to turn into a recession, if consumer demand wasn't so strong. That could happen, but that seems like a worse problem to have. How does the Fed kind of walk that tightrope and try and do this without pushing us into a deep recession?
Well, first of all, even though we've had a little bit of weakness here in December, there's a good dynamic. We saw it in the jobs numbers. I'm here in Texas in November. Jobs in a 30 million population base, jobs grew by over 7% in November, slowing down a little bit in December due to this new COVID strain. So we've got a lot of momentum going. I don't think we reverse the economy here. We'll probably have a bit of a pause in the first quarter and then should resume our growth, not at the same rate we've been seeing recently in the second quarter. So I don't think that's the risk right now, Becky. The real risk here is not so much supply chain driven inflation in goods as it is the cost of labor. Workers have power, and how you digest this without creating an inflationary spiral. And if you go to any corporate release of earnings, everyone is talking about protecting their margins and the actions they're going to take on price in order to cover the lack of productivity that they're seeing by not having workers with skill sets. I don't think this goes away in 2022. So I'm of the view that this is going to last for the year, and it's going to have to be offset. And there is room to offset it with monetary policy because the underlying economy still is strong.